Hey guys, Will Sebastian here. Great to be on with you again. Don't forget to get my free training underneath, and I've just launched my private trading room. You can get that underneath too. So let's talk really about the AUD dollar, because at the moment you're seeing a couple of things. If I look at the nearest sort of, several periods of 4 hour, you can see you're coming to the same point which you saw very, very recently twice. So top of this, okay, at this open. All right, and then you've got the same here, and you're now hitting for number 3. This area coincides with your highest 200 MA, okay? So it's showing you a reasonable pullback on the last string of up movement, more or less from around this point here, okay? If I swap to the daily just for a second, you can see, again, that slightly clearer. So what's happening is you're more or less pushing back into where you previously had rejection. Now, as many of you will know, and as some of you may have learned inside my private trading room today, we're attacking this again. So it can be ideal, really, just to take a bit of a hands-off approach and, just let the market do its thing a bit more. If you look slightly lower, where I've just drawn this eclipse, okay, you can see you have more viable levels. And that comes alongside various areas of market rejection, which I'm labeling now. Bear in mind, you've got US CPI on Thursday. That's why a lot of pairs in various financial markets, different asset classes, are teetering side to side because people want an indication, essentially something economically that may deviate the stance or decision that comes in line with a central bank body like the Federal Reserve in the US. So you can see you've got tons of support down here, and it's always important to be labeling support if you're looking for an area for a new bounce. In the very long term, you can see you are downtrending, okay? And the AUD has consistently lost value against the US dollar for a sustained period of time. Now, there's various ways you can draw this because it does essentially come down to how many periods you enter for your trend. But if you just take the last two, you can even then see it's downtrending. And if you pull this all the way back, you get the idea. It's moved down for a significant period of time. So long term, you can see it's downtrending just on a technical basis. And that began really, well, even further back, let's say. But it's gone on really since 2020 or 2021, after you had your re-rally with the AUD and the dollar lost a lot of value. So in the near term, essentially what I'm saying is if I wanted to trade it long on a technical bias, it would have to be lower. I'm not too interested in this as such, okay, because it's got diminishing probability. Essentially, like I said, if you're in my private trading room, you'll know what I'm talking about. So if you look to the upside and for shorts, really you're looking for anything that goes in line with what you can see other traders are doing in the market. Okay, and that's something else we cover a lot. If you're looking at candles, candle wicks, and everything like that, they just detail to you, or they tell you more or less where people are entering and exiting the market. Because obviously, when someone or a larger amount of money is pulled out, that's why you get a candle wick, because the price then recedes from where it was in a larger volume. Now, obviously, the more people who are shorting after an up move, the larger that move back is going to be in that instance. And it's on the flip side for long. So more people that pull out of their orders or their shorts swap into the market long, and thus you get a harsher move in that sense. So you can see what's happened recently is this pulling out of orders has only taken you so far, and you're already seeing pushes back into it. So clearly there's not a lot of strength there. Clearly that price action level has diminished probability, like I said. So if the market were to rally and get up here, I would prefer it short around this area. I'm a swing trader, so I'm looking for the longer term. And if you go above that, like I've got my monthly now, I would probably look in line with higher time frames like that. Okay, and probably vaguely around that area for renewed shorts. So I would be a little bit dubious about this. Okay, it is a long-term price action level, but again, in the realms of diminished probability. If you're going to take it long, there's a good spectrum of price. There's a good sort of gap if you look at this previous candle wick for where you could rebound on. So I'd be careful, and I would make, I'd exercise caution if you were going to be getting long here. Technically, yes, it is a support long-term zone. That's correct, but it just means, it may be preferable to deviate your long entries or just hold off for the extreme, especially if you're swing trading. But in the near term, those are the two levels I'm focused on. And I hope that helps. Don't forget to get my free training underneath and join my private trading room as well. See you in the next one.